today for Supriya Lifescience Limited. I would like to take this opportunity to highlight the 5 key strengths of the company. The first key strength is the significant scale of operations that we have and the leadership position in our key products. The top 3 products that we manufacture is chlorpheniramine maleate, ketamine hydrochloride and salbutamol sulfate. We control a large percentage of exports from India. For chlorpheniramine maleate, about 45 to 50%, ketamine 60 to 65%, and salbutamol sulfate about 30 to 40%. The other key strength of the company is the diversified therapeutic categories that we have. Currently, if you see in the last 4 to 5 years, most of the therapies have shown a good growth. The goal going forward would be to add more and more therapies with the existing basket so that we further de-risk this portfolio. Some of the new products that we have launched this year are now complementing with the existing therapies, like decongestant molecules, goes in combination with antihistamine and anti-allergy.
Okay, sir.
The second key strength that I would like to highlight, this one.
Yeah, this is Shirish Ambekar. I am just taking it over from Saloni. I'm talking about the second strength here that we would like to highlight of the company's backward integration in our business model. The top 12 products which we produce contribute 67% of our total revenue. We are fully backward integrated company in these products. We do not buy any advanced intermediates from outside, and we manufacture all these APIs mostly from the basic stage because we are not relying on external parties. We have not faced till so far any supply chain disruptions, and our manufacturing continues as per our plan. On the third aspect, our revenues are diversified with extensive global presence. The vision of the company for the last 5 years has always been penetrating into more of European US markets, regulated markets, and that would be the vision for the company going forward as well. If you look at the total percentage contribution of regulated markets to the revenue offered by the company in FY21, it was 38%. For the period April to December FY22, it has gone up to 47%. So more and more focus on penetration into regulated markets where we can get better average selling price of our existing products is something that we are focusing on going forward. The fourth strength that we as a company have, which has helped us to get the regulatory certifications and penetrating globally, is our manufacturing capability and the R&D capability. Currently, we have a site where we have 4 manufacturing blocks in operation with 7 clean rooms for isolation of the final products. Our total reactor capacity is 547 kiloliters of cubic meters. If you look at the capacity utilization, it has grown from 52% in FY18 to 71% in FY21. That is one of the reasons why we have recently added one more production block in the first quarter of FY22. The other thing that we would like to highlight here is all the regulatory authorities that have already audited and approved this site, such as US FDA, European authorities, Australia, Korean authorities, Chinese authorities, and all the authorities where we have registered our products. One additional capability that which we have unique to Supriya, and the reason why we are dominating in the portfolio that we are offering, is our capability in handling complex chemical reactions. We handle complex chemistries involving processes such as Grignard reactions, high pressure reactions. We have completely backward integrated operations in our narcotics portfolio. We have molecules which are photosensitive and which require very careful handling under controlled conditions. We handle very temperature sensitive molecules, and the scales at which we are operating these molecules is something that requires expertise that we have built over the last 30 years. The current R&D lab is DSIR approved. We are on the verge of expanding our R&D so that we can produce more products, new products in our facilities going forward. There's a significant expansion in the R&D that is progressing, and it should be going live in June next quarter. Q1 of FY23. Fifth strength is our eminent board of directors. We have a very strong board of directors. Dr. Satish Wagh is our chairman and managing director. Mrs. Smita Wagh, who is the whole-time director of the company. Dr. Saloni Wagh, Ms. Shivani Wagh, who is also a whole-time director in the company, and Mr. Barasaheb Sawant, who is the whole-time director of the company and responsible for all manufacturing operations at the site. Other than this, we also have a strong and robust independent board of directors who come from different sectors like finance, education, chemical, pharma, and they add a lot of diversity to our board and add their experience to our company. The senior management that we have in place is also strong. In the last 5 to 6 years, we really focused on building a very strong second line so that the organization can run in a more professional way. So we have on board now a professional CEO, CFO that we recently hired, Chief Scientific Officer, Chief Sales and Marketing Officer, who are all these professionals we are working with well-known international companies for the last 15 to 20 years, and they bring in a lot of experience into our organization. About the future strategy of the company, I would like to touch upon Supriya Lifescience growth going forward. Now, Saloni will take over from here, please.
Thank you, sir. Also, thanks to our CEO for giving us the information about the strength of the company. Regarding the future company strategies, I would like to touch upon a couple of things that we're doing, because the company has such strong fundamentals because of the de-risk business model and because of the global presence that we have. We also have a very good top line as well as good profits for the last 5 years, which is why the company has great potential going forward as well. Some of the things we are doing in order to help and facilitate the growth that we are envisaging in the next couple of years is the first and foremost expansion of our manufacturing capability, enhancing our capacities for infusion of new products into the basket and scaling up of the existing molecules by further penetration into newer geographies. Then expanding the product portfolio, where we are definitely increasing our R&D infrastructure so that we can add more and more molecules into the portfolio. Our focus on life cycle management for existing molecules for further backward integration and de-risking the business. Then our increase in the current market presence for existing basket that we also have penetrated into newer geographies that currently we are not a part of. We are also one of those companies who has an excellent track record when it comes to regulatory and statutory compliance. Right partners, that is why we are one of the right partners for CMO and CDMO opportunities, because we have proven our potential on a global scale by supplying for 34 years with consistent quality to all the multinational companies. I think these are the areas that we are really likely to explore and that can bring in a good growth for the company going forward. The focus of the company has always been in adding more and more products in newer therapies into the basket and the operational excellence that we have maintained across 34 years. Now I would also like to hand over to Mr. Ashish Nayak, our CFO, to take you through the financials of the company.
Thank you, Dr. Saloni, and thank you, Dr. Shambhekar. I will now share the operational performance for the quarter under review, which is the third quarter FY22. Starting with the therapies, this third quarter was a phenomenal quarter for anesthetic therapies, anti-asthma and vitamins. These three therapies have done exceedingly well. Just to give an idea, anesthetics, which was contributing about 21 crores in Q3 FY21, it has gone up from 21 crores in Q3 FY21 to almost 72 crores. That has been a phenomenal growth and jump. Okay, and so has also the vitamin as well as the anti-asthmatic therapies grown very well. And catering to the markets again, as far as the region-wise sales is concerned, Q3 FY22 there has been a phenomenal growth in Germany and Latin American sales. Okay, so these have been two very big plus points as far as Supriya Lifescience for the third quarter is concerned. I will come over to the financials of the company Q3 FY22 versus Q3 FY21. But before getting into that, I also want to set one thing right as far as the investors and the analysts are concerned over here. Historically, if you look upon it, this is the therapies that we cater to. Typically, our second quarter and our fourth quarter are the most promising quarters, and historically it has been so, and it will continue to be so in the next couple of years. till we have more products in the pipeline which are able to cater to different markets which enable us to balance out these quarterly a bit ups and downs which come up. But having said that, if you compare Q3 FY21 with Q3 FY22, Q3 FY21 our top line was 85 crores. Q3 FY22 it went up to 122 crores. That's a growth of 44%. Gross profit margins have increased from 61% in Q3 FY21 to 66% in Q3 FY22. Our EBITDA has improved from 35% to 36%, has gone up from 30 crores in Q3 FY21 to 43 crores in Q3 FY22. The PAT has gone up from 18% to 32%, that is from 16 crores to 39 crores, Q3 FY21 to Q3 FY22. For the 9 months ending FY22 versus 9 months ending FY21, if I compare, 9 months ending FY21, we did a top line of 266 crores. From 266 crores, our top line has gone up to 352 crores. That's a growth of 32%. Our gross profit margins have improved from 63% to 65%. Our EBITDA has improved in terms of absolute terms from 113 crores to 142 crores. Although as a percentage, it has marginally dipped from 43% to 40%. That's primarily on account of the new products that were launched in this financial year, which we are focusing more on the semi-regulated market. So we were expecting a marginal dip in the margin. But going ahead, we expect these margins to balance out. As far as the PAT is concerned for 9 months, again, it has gone up from 75 crores for 9 months FY21 to 105 crores 9 months FY22. So in terms of as a percentage of sales, it has gone up from 28% to 30%. So that's where we are. As far as the earnings per share is concerned, it has gone up from 10.26 in 9 months FY21 to 13.12 for 9 months FY22. That I'm through with the financials. I would now leave the floor open for question and answers if any. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Rahul Veera from Abacus. Please go ahead.
Hi Ashish sir, just a quick question, a bookkeeping question from my end. What happened to the tax rate in this quarter, sir?
Pardon?
What has happened to the tax rate in this quarter, sir?
The tax rate is remaining the same, somewhere in the range of from 25 to 27%. That remains the same.
Okay.
But what has happened is because of deferred taxes of the earlier years, that has been set off. That's all.
And this will continue, sir, even in Q4?
Yes, it should.
Okay. Fair point, sir. Thank you.
Thank you. The next question is from the line of Mitul Mehta from Lucky Investment Managers. Please go ahead.
Yeah, hi. Good evening, sir.
Very good evening.
Yeah. So can you please tell me what was the revenue of your top 3 molecules in this particular quarter, CPC, Salbutamol and Ketamine?
The top 3 products revenue for this quarter would be somewhere in the range of around 35% of the total sales. Yeah.
Is it possible for you to give the absolute number for the 3 products?
What we will do is we will share the numbers with Orient Cap and they can share the details with you. You can get the details from there. Yeah.
And sir, what was the volume growth in this particular quarter vis-a-vis quarter 3 of last year?
There has been a growth, as I said, both for anesthesia and anti-asthma as well as vitamin. There has been a phenomenal growth as far as the volumes are concerned. What we can do is we'll share the volume details with the Orient Cap team. You can get the necessary details from there.
But is it possible for you to share the system volume growth?
I would not be in a position at this point of time. I will share that separately with the Orient team separately.
Okay. So what was the share of the regulated market in this particular quarter, and how has
47% for this financial year? Yeah.
No. I'm saying quarter 3.
Yeah, quarter three was around 44%. Yeah.
And what was this?
So December is 47%.
Yeah.
Yes, ma'am. I could not hear you.
From April to December, for the 9 months, it is 47%, and for this quarter particularly, it is 44%. We have seen a very good growth in regulated markets like Latin America and Europe, especially for anesthetic product range, which is why, even for this quarter, we have maintained that 44% for regulated market penetration.
Okay. And this regulated market share, can you compare it with last year, 9 months and quarter 3?
Well, for the last, we don't have the quarter 3, comparable number. But if you look at the complete last year, we had about 38% coming in from the regulated market. As opposed to that, for the first 9 months, we are at about 47% coming in from regulated markets. So definitely, in line with the company's strategy, the regulated market share is increasing year on year.
And is it possible for you to disclose the price growth in this particular quarter?
Well, I don't think that is something that we are in a position to disclose in this particular call. If you want any particular details, I think our IR person, Orient Capital, would be the right people to connect to, and then they can resolve those queries for you.
Actually, for us, price even though there is no increase in price, why should we increase the price? I have not understood.
I think we are currently not able to disclose the volume number, so was there any sort of pricing witnessed in this quarter in our key products? Which is why I wanted to understand the value, the bifurcation of the value.
For us, value remains the same. Our philosophy is different. We never try to increase unless and until there is a major change.
Okay. And sir, can you also talk a little bit more about your CDMO strategy and where are we at this point of time, and by when do you see that part of the business taking off, and what sort of margins are there in that business?
Okay, I will answer this question. I'm Shirish Ambaikar. As regards your question regarding the CDMO business, we just started getting into this space. We have about 4 projects that are at various stages. One, I would say, is in the early supply for registrations. The second one is where we are in the final stages of development. In the third project, we are in the early lab development, and the fourth one, we have to initiate development in the lab. So this activity we started just a few months ago. The activity is picking up, and CDMO business is such, there is typically a slow start, and it takes about 2 to 3 years to realize, some significant, I would say, commercial benefits. So it will start impacting perhaps in about 2 to 3 years' time, but 4 active projects, 2 more significant ones. Discussions are initiated in a new space, I would say, which is not in our therapeutic basket at the moment.
Okay. And sir, for the full year, do you still believe that we can comfortably close the year at 40% margins? And how confident are you on this number over next 12 to 15 months in terms of margins?
Yes, if you look at our historical numbers for the last couple of years, we have maintained the 40% EBITDA margins, and we have maintained a revenue growth of about 18 to 20%. And we are very confident that with the quarter 4 of this year and towards the end of this year, we'll be able to maintain the margins that historically we have been maintaining.
And if for that matter, if you look upon it, even for the 9 months ending, or EBITDA as a percentage of total income was coming to, in any case, was maintained at 40%.
Okay.
I want to clarify one thing over here. When you look at other income over there, the one question which comes to my mind is, are people looking upon it as sort of an interest income or dividend income? No, in our case, a major part of this other income is actually an other operating income. You understand? Because what happens is when we are exporting, there are some incentives which are given by the government, like the product focus incentive which was there earlier, the MES that we used to get earlier, and duty drawbacks. So this is primarily the revenue which is related or affiliated to the business of the company. So I would look upon not only operating revenue but also the operating revenue plus the other income, which is a part of the business that I would consider. So that's how I would look upon it. Yeah, that's one thing which I wanted to clarify in this regard.
Sure. So, sir, so let's say your total other income of about 5.4 crores, which you have reported, how much of that would be duty drawback, export incentive?
Almost 95% of that would be duty drawback and export incentives. Now that is
about 1.5 crore. So about 1.5 crore, right?
More than that. 90%.
Sir, I actually...
Sorry to interrupt, sir. Sir, I would request...
Ma'am, last question. Last. Just a minute.
Okay.
Yeah, sir, can you please give us an absolute number for that particular other income? How much of that is pertaining to export incentive and duty drawback?
Roughly in the range of around 4.5 crores, yeah.
Okay, so balance is other income, 2.5 crore is the business income.
Yes.
Okay, great. Thank you.
What I'm saying is almost 90% of the other income is other operating revenue, which is like duty drawback or product focus incentives which the company was getting from the government as an incentive to export. The balance amount is on account of either some dividend income or some interest income. That's it. Nothing else.
Yeah. So that dividend income and interest income is other income. So that we cannot include as the business.
Absolutely.
Correct.
But
So
rest
2.5 crore is...
Yes.
So 2.5 crore is what we should be accounting for, right?
Yes.
Okay. Thank you very much, sir. Congrats. All the best.
Thank you.
Thank you.
Participants, we request you to please restrict your questions to 2 per participant. Should you have any further questions, we request you to come back in the queue. The next question is from the line of Yash Gupta from Angle One. Please go ahead.
So, sir, first question is on the region-wise contribution. Our European business contribution is increased from 22% in Q3 FY21 to 53% in Q3 FY22. So, what's the reason behind it, and how we are looking forward for the next couple of years?
Well, the main reason for the increase of sales in the European region is because some therapeutic categories like anesthetics, vitamins have shown some good growth in Q3 FY22. So mainly it is driven by that. Like I mentioned before, the company's strategy is to penetrate into more and more regulated markets. And the European region is a focused region for the company. Even today, other than the top products, there is a group of about 10 to 12 products that we have already applied for CEPs, and we are expecting to receive these CEPs in the next 6 to 9 months. So that is one of the main reasons for growth in the European region.
So is there any one-off in the European region, or is there anything that that we have received, or one-off of the order that we have received in this particular quarter?
No, there is nothing one-off. It's a effort of multiple years, and the CEP sort of coming in the last couple of months, wherein the sales for certain products in the European region has increased by getting better penetration and acquiring new customers. So it's not a one-off. This is a trend that we expect that would continue in the next couple of years as well.
Okay. Second question is on the capacity utilization. What's the capacity utilization by the end of this Q3? And what are our capex plan for FY23?
I'll take that question. As on today, if you talk about the reactor capacity, which we measure in kiloliters or cubic meters, we are at approximately 550 cubic meters. And one of the major activities that we are undertaking or already have started work on is modernization of our infrastructure. What this means is some of the old manufacturing blocks will be replacing with new ones. So in the near term, out of this 550 cubic meters, we will replace 150 cubic meters with a new block, which will have overall 300 cubic meters of reactor capacity, meaning 150 cubic meters incremental. So we will go to 700 cubic meters with this first phase from 550. And in the next phase, we plan to replace another 150 cubic meters with 600 cubic meters. So in the next 3 to 4 years, from today's capacity of 550 cubic meters, we'll go to approximately 1100 cubic meters. So almost doubling in the next 3 to 4 years.
So what will be the capex requirement for the first phase for FY23?
For the first phase in FY23, for the one production block that Mr. Ambekar just mentioned, we are looking at a capex of about 55 crores. This would add that about 350 KL for the capacity to 547 KL that we have.
And then recent one, that block we have added, it was a replaced one or the new block that we have added?
The one that we have added recently, which we call our D block, that has actually gone into production in June of this financial year. And it's a new production block.
Okay, sure. Thank you. All the best.
Thank you. The next question is from the line of Susmit Patodia from Motilal Oswal AMC. Please go ahead.
Hi, good evening and welcome to the capital markets. My first question is your antihistamine sale this time in this quarter was zero as per your presentation. So if you can just help us understand that.
Historically also, if you look at our sales, Q1 and Q3 are usually lower. Because antihistamines, anti-allergic kind of products have a certain seasonality attached to them. So Q2 and Q4 are usually the stronger months for this category of products. Especially for the regions like China, where we are supplying, usually Q4 is the time when, there is a lot of seasonality change and there is a surge in the demand for these products during this particular quarter. So whatever minor dip that you see in the Q3 for antihistamine range will be back on track in Q4. We expect the demand to go back to where it was in Q2.
No, doctor, if I look at your presentation, slide number 6, it says antihistamine sales was 19% of sales in Q3 FY21. And it says 0% in Q3 FY22. So
what has additionally happened also is that because post 15th December there were a lot of lockdowns imposed in certain parts of China, specifically, which is our larger market for our key products, for key antihistamine products, because there were lockdowns imposed in certain regions. One container that we were supposed to ship in the month of December, the delivery has now moved on to January. So that is the only impact that you're able to see if you're comparing it with the Q3 of FY21.
Got it. And in terms of the sales momentum into Q4 and with the expanded block of 3 to 4 years, so is it fair to say that the capacity utilization can be maintained and the top line can move at the same pace as capacity addition?
Yes. Historically also the top line, the revenue has grown at about 18 to 20%. we expect the revenue to grow almost in the similar range what we have seen historically, and the capacity utilization also to remain in the same line. See, because we are in a very large growing phase, and with new products being infused into the portfolio, with new CMO opportunities coming our way, like our CEO mentioned, there would always be need for additional capacity. So the capacity utilization would be more or less what we are seeing today.
Got it. And my last question, just on little bookkeeping on tax rate. This quarter was almost zero. So what is the sustainable tax rate for the company? Is it 25 or 20?
25%. It would remain that way, but that's primarily on account of the deferred taxes, which has been set off against the tax expense. That's the reason why it appears to be lower. But for the full year, it would be somewhere in the range of around 25%.
25%. Okay. Thank you so much, and all the best.
Thank you.
Thank you.
The next question is from the line of Kenil Mehta from Omkara. Please go ahead.
Hello. Am I audible?
Yes, loud and clear.
Sir, I want to know, if the share of our regulated business market increased, then why are our gross profit margin decreasing?
If you look at my gross profit margins, have improved from 61% to 66% for Q3. And for the full financial year, if you look upon it, it has improved from 63% to 65%.
No.
Okay.
Other income, if I say the 9 months margin have decreased from 67% to 63%.
Again, I reiterate, what I think you're doing is you are not considering the other income as a part of the total income. Whereas what I have clarified earlier as well is the other income, 90% of that component is primarily towards business operating income, which is business other operating income, which is towards the duty drawbacks and incentives that we get from the government for making the exports. So I consider the other operating income and not just as other income. So I consider that when I arrive at the EBITDA. That's what I do.
Okay, I got it. And any new product we have commercialized like oliprenol and ketamine hydrochloride?
Yes, from the new production block, which is the D block, like I mentioned, that has gone into commercial production in June of this year. We are scaling up dextromethorphan hydrobromide, allopurinol, S-ketamine also, and pentoxyphylline is also another product that we are scaling up. So these four are the ones that would be coming from the new block.
Okay, so have the customers approved the product, or it's still in approval stage?
The customers have approved the products in the sense that the sampling and all we have completed, because historically we were producing these products at a very small because we didn't have the capacity, we were producing them at a very small scale. With the new block and the larger capacity, we are just scaling up the product. So the quality approvals and all are done. We are now in the phase of registering these products specifically in the US market, in China market, in Japan and in the European market. So the CEPs and the USDMFs we have already applied for. Usually takes about 9 to 12 months to get all these approvals. So that's where all the 4 products are currently.
And what was the overall capacity utilization in this quarter, including the Block D?
Well, if we consider the existing 332 KL capacity leaving the Block D, we were at almost 71% utilization. I would say with the D block, we are at about 35% capacity utilization for D block.
Okay, thanks. All the best for your future.
Yeah, thank you.
Thank you. The next question is from the line of Siddharth Purohit from InvesQ Invest Advisors. Please go ahead.
Hello. Yes, sir. So just 2 clarifications. When I look at the quarterly numbers, I see some sort of variations or volatility in terms of revenue and margins. So margins you clarified a bit, but on the top line front also, in Q1, if I extrapolate based on the 9 months number that you have given, so there was a sharp jump from Q1 to Q2, and there is a decline in Q2. Same thing has happened in last year, Q3 to Q4. So is there any seasonality, it's going to continue, or how should we look at from the, on a quarter-on-quarter basis? Obviously, on a YY basis, we have done good numbers for 9 months, but that volatility, what is the reason behind that? And on the employee cost front, there is a sharp jump in employee cost. So is there any one-off item on that also?
Well, I'll take the first part of the question, which is, the quarter-on-quarter volatility. Like we have mentioned before, if you look at the historical numbers, also Q2 and Q4 are very strong for the company. Yes, there is a little bit of seasonality attached to the products because the key product portfolio that we have is antihistamine, anti-allergic kind of products. Basically, they are, related to seasonal changes. So due to this reason, for the key markets where we are selling these products, usually also sales for Q2 and Q4 are stronger. The same kind of trend you would be seeing for this financial year and also for the coming few financial years. Like Ashish has already mentioned that if you look at the 9 months, we have still maintained the margins that we have promised, which is about 40%. And we are very confident that going forward also, in spite of the quarter-on-quarter volatility, we would be able to maintain those kind of margins.
Yeah, and having said that, for the full financial year, whatever the predictions that we have made earlier, they are very confident of achieving that. Okay, with a good Q4 in the pipeline. Having said that, to answer your second question with regard to the jump in the employee benefit expenses, yes, there has been a jump. Some part of it is one-off. Some part of it is recurring. The recurring part is primarily what has happened is with the D block, which is the fourth manufacturing block having got operational, there has been an increase in the manpower. And let us understand, as Dr. Supriya said, that particular plant is currently operating around 35 to 40% capacity utilization. But in terms of manpower, we are almost fully stretched in terms of the manpower which is recruitment for that particular plant. As that plant matures and as it is able to reach higher capacity utilization, obviously as a percentage of the total, in absolute terms, it will not be much of a change, but as a percentage of total, the margin would definitely go up. That's point one. Yeah.
So, sir, just
and the second part, I would request to, if I could interrupt over here, is in the last quarter there has been a significant increase in the recruitment as for the senior management positions. Okay, both at the plant as well as at the corporate office. So that's the second reason why it has marginally gone up.
Okay.
But as I said, some of these expenses are one-off expenses like bonuses or incentives which were given to on achieving targets to the team, and those are one-off expenses which are not repetitive in nature. Some part of it is one-off, some part of it will be repetitive. Yes.
Yeah. So just could you clarify that, that Q1 margins that we saw is sharp dip. So was there any one-off expenses also? Because I don't see major expenses being incurred in that quarter. So it was only because of the lower top line that we booked during that quarter.
Q1 and Q3 are typically months in which both the top line as well and because of it the margins are not at their peak. Okay, but we do exceedingly well in Q2 and Q4. We did very good both in terms of top line, EBITDA as well as PAT in Q2, and we expect it to be better in Q4 in fact.
Okay, got you. Okay, sir. Thank you.
Thank you. The next question is from the line of Ashish Thakkar from Motilal Oswal AMC. Please go ahead.
Thanks for the opportunity. So as you said, fourth quarter is starkly different from the third quarter. And even if I try to do some rough backward calculation, I see that last year, quarter 3 of FY21, obviously we did 16 crore, but fourth quarter of FY21 works out to around 48 crores. So almost a 3 times QOQ jump in the profits. So now given that we have done almost around 40 crores in quarter 3 of FY22, would you say that quarter 4 does give you that kind of a material jump in the profits? Is the variance so large?
Yes, it is so large because
what happens is that if you look at the quarter 3, it is mainly driven by anesthetic, anti-asthmatic and vitamin therapy. in quarter 4, you will see a strong performance by antihistamine, anti-allergic, which is also our key therapeutic areas of operation. So they will also largely contribute. So quarter 4 historically also has been the largest quarter for us, would be the same this year, and the trend would be even similar going forward.
Okay, yeah, this helps. And ma'am, you said a 35% capacity utilization on a blended basis. Say in the next 2 years, where do you foresee this capacity utilization falling in?
No, 35% is basically the new block which we have started. The existing capacity that we had, which was 332 KL, that is almost at 72% utilization, which I would say is optimum utilization because it's a multi-product facility and we have to consider the changeover time. So the block, the only new block that I mentioned is at around 35%. And as the products, the 4 products that I mentioned, which is dextromethorphan, allopurinol, pentoxyphylline and S-ketamine, as they scale up in that block, the capacity utilization of that block also would increase. Which is why we have already initiated the work for the new block, like our CEO mentioned, the E block, which would further add about 350 KL capacity.
Okay. And ma'am, anything specific you would like to share on Dextro, given that, we are probably one of the few players who might have got this product on our side?
For dextromethorphan, we are fairly backward integrated for this product. The one key advantage that Supriya has, and one of the key strategies of taking this product into our portfolio, was that it goes in combination with our key product, which is chlorpheniramine maleate. And we are the market leaders for that product. So the global presence that we have and the customer base across 1,300 customers that we have currently, the strategy would be to leverage this customer base, because whoever is currently buying chlorpheniramine maleate is also buying in combination dextromethorphan. And they have already audited Supriya's facility. They have approved the quality. They have seen our consistency in quality for last 30 years. So the approval is much faster as compared to any other supplier. So that's the basic strategy for, taking this product in our portfolio.
Okay. So just one last question for Mr. Ashish. So I think in your opening remarks, you did say antihistamine from 21 CR to 72 CR. Was that for a QOQ comparison? Because as the earlier participant said, antihistamine is 0% contribution. So did I miss something?
Yeah. What I said was anesthetics, not antihistamine. Anesthetic, there has been a phenomenal growth in the third quarter. Yeah.
Okay. And the reasoning you gave, there was some shipment got delayed and that will spill over to fourth quarter, right, for antihistamine?
As far as antihistamine is concerned, yes.
There is a little bit of deferred sale that would happen in the month of January because of, lockdowns post 15th December in many ports. And also globally, because a large percentage of our revenue is generated from exports, which is 77%, almost 77%. What happens is post 15th of December, the entire European region, Latin American region, North American region, usually they get shut for holidays. So we are unable to ship any kind of material after 15th December. So there is a little bit of deferred sale that would happen in January.
This is not a one-time thing.
This is a consistent thing, yeah.
Okay, so actually at our record, last year in the last quarter we did was the highest growth, highest sale as far as the fourth quarter was concerned, and that will continue in this financial year.
Okay, yeah, this helps. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Yes, sir. Just like to highlight one point that before IPO, we had confidently predicted a margin in the range of 40+%, and this 32% margin which has come as a dampener for many of the investors who sort of said that before IPO the projections are rosy and subsequently the numbers are. So this is basically a one-off, and but over the full year we can able to draw back to 40% margin, sir.
Yes.
One correction. What I am sure you are doing is you are considering other income and not considering that as a part of the EBITDA. Whereas what I have stated earlier in this discussion as well is a major part of that other income is basically other operating revenue, which is primarily towards incentives like duty drawback and other and product focus incentives, which are a part of my operating income. So, but what happens is since it is reflected as other income, I'm sure you're not considering that. If you consider that aspect of, as a part of the total income, my EBITDA as a percentage of total revenue comes to around 36% for Q3 FY22, which has gone up from 35%, and for the full for the 9 months ending FY22, it is continuing at 40%. Second part is as far as with an improved performance in the fourth quarter for the full year, we are very confident of delivering the results that we had promised in the investor presentation.
So, just to summarize what Ashish has said, we have done a top line for the 9 months. If you look at it, a top line of 352 crores with a 142 crore EBITDA, which is still 40%, and a PAT of 105 crores, which is still at 30%. So whatever we have promised, even during the road shows, the performance for 9 months, if you look at it, is consistent with what we have promised, and would only get better in the quarter 4.
Okay. And what about the capex plan, madam, especially for the Ambernath unit? Also, you mentioned that one more unit is coming up, and single location this gets reduced. And any idea on the molecules which you are going to launch?
Yes. So, along with the new block that we are introducing in our current site, for which we are anticipating a 55 crore capex, the Ambernath plant will come into production in the next 9 to 12 months. We have already decided a therapeutic category of products for this particular site. Mainly, high value, low volume kind of products coming from anti-anxiety kind of category. So that is already in the pipeline. The R&D work is completed, and now we are just waiting to install the machineries and everything at Ambernath plant. The civil structure is already ready. This would add about 175 KL, 100 KL further to the capacity that we currently have.
And so the environmental clearance for this particular plant as well as the CTP is already in place.
We are just waiting for the environmental clearance changes for discharge. We just got it last month.
Okay, sir. Thank you.
The next question is from the line of Tushar Bora from MK Ventures. Please go ahead.
Hello.
Yeah. Hi, Tushar.
Yes, hi, Tushar.
Hi. So, a couple of points. On the CDMO side, Shirish ji mentioned that, we already have 4 projects in hand. If you can just help detail out a little bit more, whether we are already booking any revenue from CDMO CRAMS in the business today, or by when do we start to see some revenues accruing, as well as this number of projects for what kind of, number of projects we expect, we can move towards over the next 15 to 18 months, and what kind of contribution could CDMO as a business have on the overall business, say in 3 years' time from today?
Okay. As I said earlier, there are 4 projects that are at various stages. As regarding your question on when the revenues would start coming in, we expect revenues would start in the first quarter of next year. And since these projects, have some gestation period to reach, a level of maturity, it takes 2 to 3 years. So, as I said, in the first project, we are doing supplies for registration. Thereafter registration and approval, the first commercial quantities will start. That is 1 year away for the first project, which is the most advanced. The second project is for an intermediate for a global company. We are in the advanced stages in the lab, and the samples will be submitted sometime next month. After they approve, it will take about a year's time to give them the material for qualification. That's on the second project. Third project is in a very niche area for another international company. They want advanced starting material for a specialty molecule. The first samples are ready in the lab. So this would be a small volume and very high value, but it will be kilogram quantities globally. And the fourth project is something that the customer has asked us to start work on. We will begin the work on that as we move to the new R&D expanded facility, which goes live in June, this first quarter of next financial year.
So these molecules that we are referring to, wherever we are referring to not the intermediates, but let's say the end products, these are pure CDMO projects or CMO projects? Meaning, is this innovators?
There is one CMO, the others are CDMO.
Okay, great. And sir, if just continuing on the same theme, if you can just help us understand what is the criteria for picking up conversations at your end, because you mentioned earlier in the call that you are working with a number of complex chemistries and processes, and you have obviously built up specialities in terms of manufacturing process. So what is the criteria for picking up conversations with potential CDMO partners? Is it extension of existing therapeutics only, or is it specific chemistry skills or reactions that you work with?
The CDMO space is typically driven by our capabilities. With the capabilities that we have, which is corrosive chemistry, high pressure chemistry, if these products fall into that category, we take those processes, and typically those that involve some level of backward integration. For example, one customer has asked us to do it from a specific route. While we will do it with that route, we will go ahead with backward integration of that if the project becomes a success.
Great. So it would be fair to assume, just one last on CDMO, fair to assume that this the number of projects is just a starting point for us, and hopefully over the next 15-18 months we should see a number of more such developments happening. So, Supriya?
Yeah, for sure there will be more development. At the moment, because of restricted travel, we are not able to go and talk to potential customers. But hopefully, with the scenario improving in the next few months, for example, there is a convention called the DCAT convention in the US in March. If that happens, that gives us an opportunity to showcase our capabilities and talk to potential customers. So obviously, as we interact more with our customers face-to-face basis, these projects will come in the future, more projects.
Also, just to add to that, Tushar, with the new R&D lab, the larger lab going in operation in June, we would definitely have built in a very strong infrastructure for taking more and more such projects. The new R&D lab would be having about 28 fume hoods, and 60 scientists would be working in this particular lab. So that would, enable us to take on more such innovative projects.
Even Ambernath also, we are doing the similar R&D lab. Partially will be a R&D lab with something around about 8 to 10 fuming hoods, and the next area will be all expensive kilo labs.
Got it, sir. Thanks, that's very helpful. Just one last question quickly on the regulated market. So currently, 3 of our key products, ketamine, CTM, and salbutamol, are contributing, a greater degree of profits because of regulated market. If you can help us, which amongst the pipeline are the new opportunities where we can see a replication of this over the next couple of years? Which are the specific other products where we think the regulated market entry is now imminent and where we can, see a large contribution to profit going ahead from the pipeline?
There is a group of about 8 to 10 products, specifically products like diphenhydramine hydrochloride, tramadol hydrochloride, dextromethorphan, allopurinol, bisoprolol fumarate, riboflavin 5-phosphate sodium. So these products we are already registering as we speak in regulated markets like Europe, US, China, Latin America, Japan. So we would definitely be seeing more and more contribution coming from these products in the next few years.
So, ma'am, is it fair to assume then, therefore, two things would happen? Say in the next couple of years, our product concentration would reduce significantly from top 10 and top 5 products, and also that we would have not just these top 3, but maybe a basket of 8 to 10 products where we are looking at a significant regulated market presence. It's fair to assume that?
Absolutely. Yes. The goal is to, de-risk the current portfolio. So the dependence on in the top 3 products itself, ketamine and salbutamol would continue to grow, in terms of volumes in regulated markets. These 8-9 products that I mentioned, they would also be adding significantly. So it will be a group of about 10-12 products where we would be having that, leadership position what we currently have for the existing top 3 products.
And also, Tushar, I will add, as we all are aware, that many of the companies are moving out from China by 2024, as far as US and Europe is concerned. So some of the customers we are talking that they are moving from China, they are discussing with us for the higher volumes and higher amount of business also, exclusively to be done for them only. And those volumes and the amounts are very large.
So that opportunity is over and above what we are currently guiding for over the next couple of years. Is that correct, sir?
Yes, absolutely right. Here the technology transfer is also coming from them only.
Okay. And by
Sorry to interrupt, sir. So I would request
Sure,
you to
I'll
please
join
come
back
back
in
in the queue.
No problem. Thank you.
The next question is from the line of Utkarsh Maheshwari from Reliance General Insurance. Please go ahead.
Very good afternoon, sir. Am I audible?
Yes, you're audible.
Yeah, ma'am, a couple of questions. Just taking the half of time. One thing is that, are there some sort of one-offs in the expenditure side? Because other expenditure has moved up a little bit on a higher side. So is that got something to do with our logistics cost increment because of the increased cost, increase in the logistics fare and all? Because I think we have seen the freight. The freight is a one large component of this other expenditure?
No, the other expenditure is primarily gone up with the addition of the 4th manufacturing block in this financial year. So as a result of that, the expenses have gone up primarily on account of that.
Okay, so this should be a recurring number.
Yes, this should be a recurring number.
And similar is the explanation for the employee cost also because of the new block which has got added. And probably one more, right now?
Employee cost would be in 2 parts. There will be there are some one-off expenses in the employee cost. And some part is primarily on account of obviously the D block getting operational, which is the 4th manufacturing block. And also, since we have added senior managerial personnel in the team in this financial year, so that's another reason why it has gone. Yeah.
Okay.
But that's something which will obviously be benefiting in the long run, yes. So
basically, as you have mentioned in the call that some consignment which was not shipped because it is reflected in the working capital, I think that is getting reflected in the changes in the inventory. So it is fair to assume that the run rate what we have achieved in the month of in the second quarter should be similar one could be achieved in Q4 also, right?
We have already in the media in the initial roadshow presentations we had given an indication of the targets that we are looking at. We are very confident of reaching those targets.
Yeah, because I can see that there is an inventory which has been there, some 30 odd crores is a change in inventory versus some 3 odd crores in Q2. So probably that is a reflection of that what you have mentioned that some export got delayed, deferred sort of thing. So that must have now got exported, right?
It is in the process of getting exported. As this.
Fair point. Thanks a lot for your time, sir. That's it.
Thank you.
Thank you. The next question is from the line of Monica Joshi from Hornbill Capital. Please go ahead.
Hi team, and thank you for your time today. I just had a couple of questions. One is if you could quantify that one-off part of your employee expenses, that would be great.
It could be somewhere in the range of around 2.5 to 3 crores. That would be primarily on account of incentives given to the management team. The rest of it is primarily on account of increase in the manufacturing block. That's one, and increase in the senior management team of the company. Yeah.
So that's 1.5 to 2 crores is the one-off part.
Yes.
Okay. Now my question is for anybody who chooses to answer this. I see that you have a capacity utilization which is fairly low on your new block, and there is a whole line of assets which is coming up in Ambernath and various other blocks. Now I understand that this is an area where you need regulatory approvals both from your clients and from various regulatory bodies. But I don't see why you should be growing at 18 to 20% when you have this whole set of products coming out and you have, assuming that you clear all the regulatory hurdles. Is there something that is stopping you from upping your growth guidance to say, I'm just putting out a number, please correct me if I'm wrong, say 25% or 30%? So what is it that it would take you to grow at that number?
See, Monica, fair question, but you have to understand that when we say that, we are infusing new products into the portfolio, we are coming up with all these new blocks, there is a certain, time period that requires for turning these blocks and starting the commercial production, which we have to anticipate. Also, when you're registering a product in a regulated market, again, there is a certain timeline depending on which country you're registering. It takes anywhere from, 12 to 24 months. So considering all these factors and the cooling period sort of, involved in registering the product in regulated markets, getting all these production blocks up with the civil work and all those areas, then getting the necessary licenses, environmental clearances and all the approvals for the facility. That's the reason why we anticipate 18 to 20% growth. It's all linked to that timeline of, how the turnaround of these products would happen.
So you've grown 35% in the first 9 months, correct?
Yeah.
Yes.
And that is a payoff of what you have done in the previous few years. And I suppose you would have continued to do that. You have been at it for a very long time. So with your assets coming up, will that run rate, maybe a slightly lower run rate, will that not continue, Saloni? That is the question.
Well,
yeah, Monica. See, at the end of it, we always believe that it is better to under-declare and overachieve. Okay. Our target is much higher. That's an internal target. But as far as these forums are concerned, that's what we stick to. But obviously, internally, we have got much higher targets. I'm not at liberty to disclose those targets at this point of time. But please rest assured that we are definitely striving for a much higher targets as compared to what we have declared in this forum. Yeah.
Okay. Ashish, there's one suggestion that if you have this kind of an other operating income in your other income, that it is best that you declare it as another operating income. That would help us in putting that as a part of your revenues. Right? That's a suggestion. I would, please request you to take it.
I've already taken note of that. You will immediately see the same from the coming quarter.
Yes.
Definitely.
Thank you so much, Ashish, and I wish you guys the best. Thank you.
Thank you. Thank you.
Thank you. In the interest of time, that was the last question. I would now like to hand the conference over to Dr. Satish Wagh for closing comments.
To sum up, we believe our ability to adapt, reinvest, and innovation that has kept it at the forefront of the industry. This unique business philosophy on top of promising economic trends, we can get a very well positioned to seize the next phase of the growth opportunity. We believe that Supriya Lifescience offers a huge growth potential to investors who would be on boarding with journey with us. Thank you once again to attend the call and for your patient listening, and we look forward to taking with you again next quarter. For any further information, we request to get in touch with Oriental Capital, our investor relations advisors, and they will be happy to help you. Jai Hind.
Thank you.
Thank you everyone for giving us the opportunity. Thank you.
Thank you.
Thank you very much. On behalf of Supriya Lifescience Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.